Welcome back guys to another video. In this video, I'm going to show you a very simple strategy that I have been using that has been extremely profitable. All you guys need to do is cut out any distractions, put your phone on do not disturb, take notes if you need. And if I were you, I would recommend watching this video at least 2 to 3 times. It's kind of like watching a movie. If you watch a movie the second time, you're going to see things that you didn't see the first time. Also, if you guys haven't followed me on Instagram, shoot me a follow on Instagram. There should be something on the screen right now, or there is a link in the description where you guys can shoot me a follow. And if you want one-on-one mentorship, just send me the word one-on-one mentorship to my DM, and we can talk more about that and what it consists of. So now let's get into the charts. I want to show you guys this very simple strategy that I've used that has been insanely freaking profitable. First things first, all I've been trading is the NASDAQ. You can use this for the S&P 500, for the Dow Jones, and I'm going to give you 2 variations on how this strategy works, or 2 entry models I should say. But all we're realistically doing is we're trading on lower time frames like the 30-second or the 1 minute. I have really been preferring the 30-second because the price action is just phenomenal on here. And the only difference between the 30-second compared to the 1 hour chart is on the 30-second, we are seeing candles print every 30 seconds compared to every hour. And when it comes to the timing, you guys can realistically use this strategy whenever you want. I would recommend though trading for at least 30 to 60 minutes every single day, Monday through Friday, and you will see one of these setups appear. So when I'm on the 30-second time frame, all I'm looking for is a specific pattern to form. I want to see a clear trend first off, and then secondly, I want to see lower lows and lower highs, or higher highs and higher lows form. So right here, this was Friday, September 5th, 2025 at 9:52 EST. And I have my time set on the time zone to New York UTC 4, so you guys can add that as well. But I do live in California. I just want to be aligned with the market makers and when they're trading. So when I'm trading, like I said, I'm looking for a clear trend. Here is a beautiful representation of what we want to see in the markets. We want to see a very visible, clear trend, whether it's an uptrend, but for this example, we are seeing a clear downtrend. So we could see a clear downtrend. Right here, we have this support or low right here. What I want to see most of the time when I'm trading is I want to see a low or a high be broken. So right here, we can see that this low is broken. This low right here is broken right here. The market's now forming lower lows, lower highs, lower lows, lower highs, and it continues to make these lower lows and lower highs. So there's 2 ways of entering into the market. The first way is we can use our fair value gaps. So if you guys go right here to indicators and you type in FVG, you can get this indicator by nephew Sam, the fair value gap indicator, and it will automatically print these fair value gaps on the chart. So this is a great representation right here. I want you guys to notice we have this lower low, then we have this lower high, then we have this new lower low and a lower high. In this particular lower low, I want you guys to notice how we have this fair value gap that formed right here. We also have another fair value gap right here, and you guys could have used either one, but I want to focus on this fair value gap right here. Now, usually when I see a lower low or a higher high form, that's when the fair value gap is going to be formed. When we look at this lower low though, notice how it's 1, 2, 3, 4 candles. That's what you guys want to see, is around 4 to 5 candles that form a higher high or a lower low. So we have this lower low right here, a fair value gap is formed, and then you guys can see the price retrades into the fair value gap right here, giving us our entry, and that's where we would look to take a position. So we have our fair value gap right here. If I were to have gone into this trade right here, I would have set up a short position right here at the fair value gap. And a fair value gap is 1, 2, 3 candles. So usually we want to see the 4th, 5th, or 6th candle retrade into the fair value gap like it did right here, here, and here. So we saw that happen. So as I'm setting up this trade, hypothetically, let's say that we saw this fair value gap form, this candle close. Now we're looking for price to retrade into the fair value gap right here. When I set my stop loss, I'm going to have my stops above the previous lower high or previous higher low. So for this example, 1, 2, 3 candles, usually my stop loss is right above the first candle that makes a fair value gap. But since we have this lower high right here, I would have my stops right above there. And I have this magnet tool clicked on, so it will automatically connect to the open and close of the candle or the high and low of the candle. So that's where I would have my stop loss right there above this previous lower high. Then what I'm going to do is I'm going to use my fibs from this previous lower high to our current lower low, and our negative 100% is actually going to be where our target is going to be. Now I'm going to give you guys some game real quick too. Let's say that there wasn't a fair value gap, and this, ideally this would be the trade right here. We would have a 2-to-1 risk to reward ratio. This would have been a very nice trade. Price ended up hitting it right here on this candle, would have closed perfectly, very little drawdown. So let's say that we were looking at the market right here though. We saw price made this new lower low. We have a bullish candle forming showing that this is our low right here. We'd have our fibs, the 100% level at the previous lower high, and our 0% at the current lower low. So we can see right here, if we were to have set this trade up, there is no fair value gap. Let's turn this off. Let's say that we are looking at the price just like this, naked price action. These key three levels, 6.2, 7.05, and 7.9, and by the way, here are my Fibonacci settings right here. These three key levels of 6.2, 7.05, and 7.9 can also be used as an entry. So we could hypothetically have had a short position set up right here, let's say at the 6.2. Our stops would be the same right here at this previous lower high, and then our take profit would be at the negative 100% level. Notice how a second ago when we used the fair value gap as an entry, our risk to reward ratio was only 2-to-1. Now we have a 4.2 risk to reward ratio, meaning that our take profit is 4 times the size of our stop loss. The Fibonacci retracement is mathematically derived, and so is the market. There are specific prices that the market has to go to, it has to hit. So as we look at the 6.2, watch how price goes and kisses it to a T and then pushes down, and it may hit the 7.05 and 7.9 too, where you guys could have entries. Like look at the 7.05 if we had it right there, 5.43. Look at the 7.9 if we had our entry right there, 7.6. We would have had a much crazier risk reward ratio, but for this example, let's just focus on the 6.2. A 4.1 or a 4.2 risk reward ratio is absolutely insane still. So look at this. Watch how price moves up. Okay, now we have this new lower low that's formed. So we would have price down there, and then our new negative 100 would be right here. So it would give us a 4.67 risk to reward ratio now. Bring our trade right here, adjust this a little. Boom, 4.25. Price is right at that 6.2. Kisses it. Kisses all three levels, 6.2, 7.05, 7.9. If you would have had an entry at all those, you would have been in the market right now. And usually the way that I think of the Fibonacci retracement in these fair value gaps, or I should say when I think of the 6.2, 7.05, and 7.9 in the fair value gap, is I want price to hit that thing and freaking dip. Go to the downside or the upside very, very, very aggressively. So what do we want to happen? We want this thing to freaking push down to our negative 100% level. Watch price play out. Boom, hits our take profit right here on this candle. Right here. And the duration of this trade, guys, if we got in right here, the duration of this trade would have been 8 freaking minutes. 8 minutes to get a 4.25 risk to reward ratio. So that's why I tell you guys in my videos, like, you don't need to trade every single day. You don't need to trade multiple times a week. If you can get 1 to 2 very high quality trades every single week, you're going to be good. But the biggest thing that I've noticed when you're looking at the market is you want to see a clear trend. You don't want to trade in choppy markets with very big wicky candles like this at the market open. Like, dude, trading at the market open, that's dead. I don't know who's still doing that, but if you're doing that, you're kind of like gambling. You don't want to be doing that. You want to see very clear price action. And I'm going to give you guys one more gem before I hop off this video. Best time to trade is ... That's your gem right there. If you can trade for 1 hour a day from 10 a.m. to 11 a.m. and watch the markets and be very, very self-disciplined and patient to wait for that perfect setup, dude, you're going to find a couple of good setups every single week. Show up Monday, Tuesday, Wednesday, Thursday, and Friday. If the setup is not there, do not click the freaking buttons. It's as simple as that. But some people just do not have any self-discipline, and they think that the market's never going to give them a setup. If you can catch a setup like this, you'll be able to easily make 2 to 5 to 5 to 10K every single week, and you'll be good. You can reinvest your money into other assets, and you'll be on the road to financial freedom. So really look at trading as a vehicle to get you out of that circumstance, that position in your life that you're really not happy in right now, because it really, really is. So I'll see you guys in the next video. Peace. Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.